Big part of your monthly mortgage payment is your escrow account. Do you know what an escrow account is and how it works? If you don't, I'm going to explain it in about 3 minutes. When you take out a loan to buy a house, you're agreeing to pay back the loan, but you're also responsible for paying property taxes and home insurance. Your lender wants to make sure that taxes and insurance are paid on the property, so many will require that you maintain an escrow account to cover those expenses. Your lender will calculate the monthly cost of property taxes and insurance and then add that amount to your monthly loan payment. That way, when you make your payment, you're contributing towards those future tax and insurance bills throughout the year instead of having 2 lump sum bills due each year. Your loan servicing company receives your payment and they set aside that extra amount into what's called an escrow account. Think of it like a savings account that collects money each month that's earmarked for those future bills. When the property tax bills are sent out, your servicer will receive a copy and then they will make that tax payment on your behalf using the funds in your escrow account. Same thing for the home insurance. When the policy is set to expire, your loan servicer will get a renewal notice and they pay that renewal from the escrow account to your insurance company, and that renews the insurance for the next 12 months. A couple rules about escrow accounts: they're required for loan programs except a conventional loan where you're putting down at least 20% down payment. Then you can choose whether or not you want to have an escrow account. VA doesn't require escrows, however most lenders that make VA loans do require them. Lenders are allowed to maintain a cushion of 2 months in your escrow account. That's there to guard against any unexpected increases in tax or insurance bills when they're due. This is why at closing there are a few months collected up front. That's the cushion being collected. Some people will say, I paid my annual insurance policy up front at closing. Why do I have to pay again for that escrow account? Doesn't that mean I'm paying for it twice? It's because that annual premium you paid for will expire a year from now. By paying into your escrow account over the next 12 months, you're making sure there's enough saved in that escrow account to renew that policy a year from now when it's ready to expire. Sometimes there may be significant increases in your taxes or insurance and they exceed even that cushion amount. If your escrow doesn't have enough to pay those bills, that's okay. The lender will still make the payment on your behalf, but you'll then be facing an escrow shortage. 2 things will happen next. First, your payment will need to increase to factor in the new higher taxes and insurance so you won't have a shortage again. And second, you have to address how to pay the lender back for what they paid on your behalf. You can either send in a lump sum one-time payment, or they'll take the amount owed and spread the repayment over the next 12 months. Escrows are not an exact science and they can change every year. If you have a fixed rate loan and wonder, why does my bill keep changing? I thought I had a fixed loan. It's due to changes in your taxes or insurance. Every year your servicer will do an escrow analysis to make sure the correct amount is being collected, and they're not allowed to have more than that 2-month cushion. So that analysis is important to make sure they have the right amount. Most loan servicers will let you view and manage your mortgage account online, and they usually have a section covering your escrows. It shows how much goes in every month, and it shows the outflow of money when taxes or insurance are paid. It's good practice as a homeowner to periodically check that escrow account, and that way you can see where your money is being collected and then where and when it's being dispersed.